Hey everyone, Couch Investor back to another video for today. So here are 4 stocks to buy or watch in the month of December, the last month of 2023. Pretty crazy how fast this year has gone by. Now I'll always add that little disclaimer. Just because those stocks are in this video does not mean that there aren't other companies out there that are worth putting on your watch list or putting on your buy list. Also, it's always better to buy when the market is red than when the market is green or whenever a certain stock, certain company has gone up 10-20% in the last couple of days because of some positive news. With that said, let's start with company number 1, a company that has gotten actually some attention in the last couple of days, and that's Take-Two Interactive Software. For those of you that are unfamiliar, Take-Two is the creator of GTA 6, they own Rockstar Games, 2K, and they recently acquired Zynga. So the company is worth $26.23 billion, has a forward PE of 38.2 times, and as you can see, compared to its 5-year means, it is a bit more expensive today. Same with EV to EBITDA, right now 27.8 times in the next 12 months compared to a 5-year mean of 20.8 times. Then price to sales sits at 4.5 times compared to 4.8 times in the last 5 years. And yes, that jump here is when the acquisition of Zynga was completed, which you can maybe visually better see right here. Huge increase in shares outstanding. Free cash flow per share for this year is currently negative, but the estimates for EPS growth in the next 5 years sits at 30.8%. So plenty of upside on the bottom line, and on the top line, whenever GTA 6 will get released, they say 2025, expect a huge boost from that game as well. Remember, GTA 5 is a game launched 10 years ago, and today it's still one of the most popular games around. I believe it is the most profitable game ever. So the hype for GTA 6 for this stock as well is definitely warranted. If we look back at their latest quarterly earnings, they say $1.44 billion net bookings with outperformance of Grand Theft Auto 5, Grand Theft Auto Online, and Red Dead Redemption 2. I'll repeat myself, this is a game that was launched 10 years ago. They continue by saying here, while we expect continued macroeconomic uncertainty, we believe that we are well positioned for the holiday season and are reiterating our fiscal 2024 net bookings guidance of $5.45 to $5.55 billion. And of course, with the release of the trailer for GTA 6, I do expect a small but moderate boost to GTA 5. Some analysts are expecting that the new GTA 6 could generate more than $1 billion in revenue in the first week and sell up to 14 million copies at launch. For perspective, the highest grossing movie of all time, Avengers Endgame, had a worldwide opening of $1.2 billion. Again, the impact of a great game launch should not be underestimated. So looking at the graph right now, of course, since the end of 2022, the stock went up around 50% or so in the last 2 months. The stock has run up from that rebound at the 200-day moving average, which was at $135. So as always look at some weakness in the stock when you look at technicals. For the company itself, look at the fundamentals, but if you want a better entry right now, I do believe that $150 was previously a resistance point. We are trying to close the week above that, so maybe that can start to be a support area. Overall, RSI is a bit high, but not overbought. Now, before moving into the second pick, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So company number 2, we're moving into the defense department, and that's RTX Corporation. You're also getting a nice little dividend here, dividend yield of 2.9%. The company is trading at a forward PE of 15.7 times, which is a bit lower than its 5-year mean of 18.8 times. EV to EBITDA sits at 10.2 times compared to 12.6, and then price to sales at 1.5 times compared to 1.7. If you look at price to free cash flow, that is in the last 12 months, it sits at 21.9 times compared to its 5-year mean of 32.3 times. Currently, it has a market cap of close to $117 billion. If we look at the shares outstanding, free cash flow per share, and the growth rate for the next 5 years, in 2020, Here we see that big jump as well, but since then they have been acquiring their shares back. Free cash flow per share has rebounded since then. And then the 5-year estimate for the EPS growth here sits at 10.2%. Then looking at their Q3 results. So they say here, this was to me very, very impressive. Company backlog of $190 billion, including $115 billion of commercial and $75 billion of defense. $190 billion company backlog. I mean, that's pretty insane. That's more than a lot of publicly traded companies are actually worth. They repurchased $1.4 billion of RTX shares. They say here that they announced a $10 billion accelerated share repurchase program, and they updated the 2023 outlook. Basically, they are reporting sales and adjusted sales are approximately the top line estimates of the previous outlook. And this, by the way, is despite the GTF fiasco. Free cash flow will be approximately $4.8 billion, up from approximately $4.3 billion, and share repurchase spending of approximately $12.8 billion, up from $3 billion. Then more recently, we had some contract announcements. So for the Navy here, Raytheon Missile and Defense were awarded $225.3 million cost plus fixed fee and cost only modification to a previously awarded contract to exercise options for continued air and missile defense radar and enterprise air surveillance radar integration and production support. Another one here for Raytheon Southeast Asia Systems. They were awarded $145 million hybrid cost, no fee cost plus fixed fee, firm fixed price. I mean, whoever comes up with those terms, congratulations. Contract for Qatar Phased Array Tracking Radar to intercept off target or Patriot, depot operations, technical assistance, and new equipment training. So again, they keep getting those huge contracts. Of course, it's a very, very big company with a lot of important people working there. Then looking at the graph right now, of course, after the news of the issue with the GTF engine, the stock went from $86 all the way down to $70. Since then, we've made our way back up to $81.5, which is above the 50 and the 20-day moving average. That gap here on that announcement or that previous announcement was filled already at the start of November. The 200-day moving average sits at $86 currently. Of course, when investing in RTX or Lockheed Martin or any other defense company, yes, you are going to profit whenever there is geopolitical issues around the world. Up next, company number 3, you're probably going to be very, very bored listening to this segment because this is a company you've probably heard of way too many times in the last couple of weeks, if not months. But hey, since the stock price is not really moving that much, why not speak of it again and again? Because I do still think that this is one of the best opportunities. Even if you're looking at it from a 12-month perspective, I think the upside is pretty insane, and that's PayPal. PayPal currently still under $60, still has a forward PE of 10.8 times, EV to EBITDA 8.1 times, price to sales 2 times. And if you look at the mean, I mean, it's extremely undervalued. Of course, there was that big bump here during the pandemic, which made it a bit overvalued. So yes, the mean could be a bit lower, but since I put the 5-year mean, you're getting a bit of the pre-pandemic era, post-pandemic era as well, and the pandemic era. So mix that all together, and I still think we are extremely undervalued. And now, since we are undervalued and since the company is still generating around $5 billion in free cash flow yearly, buying back also billions of dollars worth of their own shares, this is the current picture. So despite the stock not moving that much, actually moving to the downside, your shares are worth actually more. You're getting more of that company because they are buying back more and more shares. Free cash flow per share has also increased. And then the forward estimate, the EPS growth for the next 5 years, sits at 15.39%. Now with PayPal, we've spoken about this company a lot. I've talked about the bear case as well. More recently, I made 2 videos about that. Those will be in the top right corner if you missed that. But for those that are maybe not aware, let me show you this picture right here. I posted this on X. So the most popular payment options by continent. Just a quick disclaimer here. The data source from that research here was the website that was tracking payment technologies used by the top 1 million most visited website worldwide. Still, it's pretty impressive that you see PayPal in Africa #1, Asia #1, Europe #1, North America it's #3, Oceania #1, South America it's #4. So yes, PayPal is used a lot worldwide. But that is not really the core issue here from an investment standpoint. The core issue here is that the margins have come down for the last couple of quarters. Of course, the last quarter it has come down as well, but much less than what we've seen before, so maybe the bleeding has stopped. But until we can actually see a clear sign that margins will stop going down, yes, questions will still remain. Now, of course, you've all seen already the announcement that Venmo will not be available on Amazon starting January 2024. A lot of people will say, oh, this is very bad for PayPal. To be honest, it was a very, very minimal aspect of the financials for the company. So financially wise, the impact here is very minimal, but maybe from a point of view of possible partners, stuff like that, that impact might be greater because, well, why is Amazon not partnering up with Venmo, which is extremely popular in the United States? Why is that? I don't know. We're still waiting for some message from maybe Alex Chriss or somebody else at the company to explain that move. Probably they'll tell us more in the next earnings call. But margins, that needs to be a bit better. We know that this company is not a hyper growth company, but we could expect some reacceleration of growth at the top and bottom line. We know there is a small restructuring happening at the top of the company, a couple of new people put into new segments for the company, more transparency as well. Talking about transparency, you've probably seen this tweet as well from Alex Chriss on X when talking about Thanksgiving Cyber Monday and how successful it was for PayPal. So they processed approximately 400 million transactions, put around $8 million back in customers' hands with cashback and savings. Cyber Monday was the largest shopping day of the year with approximately $5.8 billion in TPV and 87 million transactions. Now, I'll say the same thing I said during the bear case video. I do still think that PayPal dropped the ball when it did not pursue in-person shopping. That is a huge, huge part of, well, the shopping economy, let's say, and PayPal is not really playing a big role or any role in that right now compared to the other players, for example, Adyen or Square. That's too bad, but overall right now the stock is priced in at close to zero growth, right? And with that free cash flow generation, I mean, it just doesn't make any sense for PayPal to be trading at the level it's trading at right now. Of course, it was at $50 back mid-October. It has rebounded since then over the 50 and the 20-day moving average. We will probably see, and we have seen actually already some resistance at around $60. The 200-day moving average sits at $66 or so. RSI still pretty neutral right now. PayPal, compare that to other fintech companies, has not really moved that much. I mean, Block was up 60% since their earnings report. Hood had a good little rally. Affirm, all of those fintech companies had a nice little rally. PayPal right now, not really moving that much because we are still waiting for more confirmation. There's a new CEO, there's new management. I mean, in one quarter, they won't be able to solve everything, but I do expect them to tell us what their plans are for 2024. And then a quarter after that, if I do not see any change, then yes, maybe it is time to go. But do give them some time because I've already seen some people say, oh, I'm already disappointed with the vision and stuff like that. The company hasn't done much since the CEO has come in, besides making some changes and being a bit more transparent, which is much more than what we've gotten from the previous CEO. So I still remain with my opinion, PayPal will outperform the market in 2024 unless they prove otherwise. Up next, last company for this video, and that's Alphabet. Yes, I know Alphabet had a nice little run up this week because of that announcement of their competitor to ChatGPT, to GPT-4 actually. We're going to talk about that a bit later on. But currently, if we look at the valuation, it's still lower than its 5-year mean, despite being up 55% year to date, despite having a market cap of $1.72 trillion, it still is cheaper than its 5-year mean, PE, EV to EBITDA, even price to sales, and definitely price to free cash flow. And with Alphabet, this is something I mentioned before, you're going to get now the full effect of the share buyback, something you've seen with Apple, for example. I mean, we're clearly seeing this with Alphabet playing out already for the last couple of years, buying back a lot of their own shares, returning a lot of value to shareholders, which is why you're seeing free cash flow per share increasing quite nicely each and every year. As for the EPS growth in the next 5 years, the estimates there are 15.79% growth, so quite nice. So what happened this week? I'm not going to go through the whole article here or the whole blog article. So they introduced Gemini, our largest and most capable AI model. Now it goes through all the specific, the introductions, what it can do, etc., etc. To be honest, it's pretty confusing because they do come out with 3 different sizes here: Gemini Ultra, Gemini Pro, and Gemini Nano, which should be available on the Pixel 8 only Pro at this moment, which is a bit disappointing, but maybe in the future that will change. They then go on here to compare Gemini Ultra to GPT-4 with regards to text, multimodal. Most of the times, I think most, if not all of the time, Gemini beats GPT-4, even GPT-4V. They go on, show us more examples, stuff like that. I think this is still early days to see how many people will actually switch from GPT to Gemini, remains to be seen. But what this will definitely do is increase demand for Google Cloud. I mean, Microsoft Azure has been growing quite fast in the last couple of quarters, the last couple of years as well. Definitely gets a lot of a great push from OpenAI's ChatGPT. If you remember, if we go back to the latest earnings report for Google, the cloud is continuing to grow, but it grew a bit less than what was expected. That's why we saw a little drop in the stock price. If we look at Google Cloud, the profitability of things, while it is this year, this quarter was profitable, last year same quarter was unprofitable, I do still think that this segment has a lot of upside ahead of it, and in my opinion it will get a push from that recent launch. Now, despite all of that, Google still dominates in search despite all the regulations that they might face, all the headwinds that they might face. They're still the leader there. They're still leading with YouTube as well. So it's not just one segment here, it's plenty of growing segment that they are still operating in, and in most of them they are the clear leader. And I'll plug this again in this video. The Pixel phone is becoming bigger and bigger by the year. They are going to become a huge player in the phone market worldwide. Why is that important? Well, because they are paying billions of dollars to Apple, to Samsung to be the default search engine on those phones. But if their own phone becomes a dominant player in that market, well, maybe they won't be needing to pay billions of dollars to their other companies, because if you buy a Pixel phone, guess what? It's Android, it's Google operated. You're going to use the Google search engine. Despite all of that, they're still generating $22.6 billion in free cash flow, making them a free cash flow machine. That's why you see all those buybacks, and that's why they're also able to invest a lot in their own business, in lots of other bets as well. There's still Waymo as well. If that becomes very, very successful, I mean, the ride-sharing autonomous industry is going to grow and is becoming more and more valuable as well. So lots and lots of upside for Google, or Alphabet, shall I say. But like I said, recently we had that little jump here. I mean, we tested the 200-day moving average, which was at $120, got a nice little rebound, and now we're trading at $136 or so. RSI sits close to 60. Of course, if we zoom out, yes, the stock all-time highs was $150, but I do believe that right now the company is in a better position financially, fundamentally as well, with AI's tailwind, with the growth in cloud, growth in the advertising market. Again, I mean, companies like that, we've seen big tech companies outperform a lot of other companies in 2023. So sometimes you don't really have to look that far away. Sometimes choosing the big guys is just the way to go. So those are the 4 stocks to buy or watch in the month of December. Of course, do share yours down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not. Let's see you all in the next one. Bye-bye.